Hi everybody, it's Maureen Lein, your local lender with Rate, here with this week's Mortgage Minute. So today is Wednesday, March 25th, 2026, and it's about 9 a.m. So this week has been a true roller coaster for mortgage interest rates. But honestly, it's really all been driven by the headlines. The biggest factor, well, obviously the ongoing tension between the U.S. and Iran. So last week, fears of escalation is what pushed these oil prices higher, which then sparked inflation concerns. And this then is what caused the rates to spike. But just in the past few days, we've seen the complete opposite. Talks of a peace deal, lower oil prices, and the markets are starting to now calm down. So that's why we're seeing this up and down and back and forth with interest rates. One headline will make those rates go up. The next one will bring them back down. So right now, the markets are extremely sensitive to all of this geological news. So let's talk about housing activity. Mortgage applications, they dropped last week. And rates, well, they moved up slightly from about 6.3% to 6.43%. Purchases were down 5% week over week, but still up 5% compared to last year. Refinances, which are rate sensitive, well, they fell 15%, but are still up 50% year over year. On the economic side, well, job data is showing a little bit of softness. Private job growth has been pretty weak, and we're also keeping a close eye on the jobless claims and the upcoming jobs report. A softer labor market, well, that could help rates improve, but not if inflation sticks around. And that brings us back to the oil and inflation. The Fed is still in a wait and see mode here. So they're not quite ready to be rushing into cutting interest rates, especially if energy prices keep pressure on inflation. So where does that leave us today? Well, rates are stabilizing a tiny bit as the tensions are starting to ease, but volatility is still very high. The direction of mortgage rates right now isn't just about housing or jobs. It's about global events and inflation. So bottom line, expect more ups and downs in the short term. But if inflation does cool and the job market softens, well, we could hopefully see this opening the door for better rates later on this year. But who knows? Well, that's it for today, guys. It has been a crazy week or 2 weeks. And if you have any questions about mortgages or interest rates or whether you should refinance, you know you can reach out.